Hi, everyone, and welcome to episode number 25 of the Atlas Annuity Podcast. I am your host, Marty Becker, and the owner of Atlas Financial Strategies in St. Louis, Missouri. Today, I want to talk to you about the three most important criteria that determines how to get the highest guaranteed income from an annuity. I do a lot of income planning for people nearing or in retirement. And I know that more often than not, they're probably talking with other advisors, which is totally fine. I want you to get as many opinions as you feel necessary to feel comfortable. Because, like I tell the people who contact me all the time, this is your money. You've worked your entire life for it. But whatever advice you are getting, just make sure that it's verified. So, no opinions and no hype, because I continue to remind them that they need to ignore the hype. The only thing that matters is that we are getting you the most guaranteed contractual income for every dollar that you are going to fund an annuity with. And if it's not a contractual guarantee, then it doesn't mean anything. It's all speculation. Because what happens in this industry a lot, and I find it very frustrating personally, is that people will go to these dinner seminars and they'll hear about a particular product that has a huge bonus attached to it. And once they hear about that, they can't let it go. They can't get it out of their head. And they'll call me and they'll say, this one has a 25% bonus, and this one has a 45% bonus, and this one has a 1,000,000% bonus. And they'll just get that stuck in their heads. Honestly, it's not their fault because they don't really know what they're looking at. So they hear something about a huge bonus, and then that just sticks in their mind. Really, the only time you should be considering the bonus and taking it into account is if you're looking at just a straight fixed indexed annuity that's designed for growth and protection. If we're going for income, you need to just forget about the bonus altogether, because the way to determine which company will give you the most guaranteed income for every dollar that you're going to fund your annuity with is based on three calculations. And those three numbers, those three calculations are: number one, the bonus. But Marty, I thought you just said forget about the bonus. I did, but bear with me because it is important. It's just not the most important. It's just one of three parts. Number two is the roll-up rate. The roll-up rate is a guaranteed percentage that is predetermined that your income value will increase every year that you defer income activation. So basically, when you say, I want the money, start putting it in my bank account every month. And that guaranteed roll up can be calculated either with simple interest or with compounding interest. And then number three is the payout rate. So that's the percentage that they're going to pay you off of that income value, which has the bonus and the guaranteed roll up rate inside of it. So, like the 4% rule, you can only take 4% out of your portfolio. The payout rate is how much the annuity company is going to pay you out of that income value. And the older you are, the higher the payout rate. The younger you are, the lower the payout rate. We're just going to look at a quick example, and I'm going to use round numbers for simplicity, but always keep in mind the three components, the three calculations that will get you the highest guaranteed income from an annuity: the bonus, the roll-up rate, and the payout rate, all working in conjunction together. So let's just say we have a married couple here looking to fund an annuity with $100,000. Now, this example annuity has a 10% bonus, a 10% simple interest roll up. They're going to defer income activation for 5 years, and then it has a 10% payout rate. That's a huge, massive payout rate. But just to use those numbers, so you have $100,000 to start with. That's what's funding the annuity. The annuity company is giving you an additional $10,000 on day one as a bonus. And then every year that they wait to activate the income is an additional $10,000 to that income value. So that's a total of $50,000 over that 5-year period. All of those added together come out to $160,000. With a 10% payout rate, 10% of $160,000 is $16,000 per year. That would be the guaranteed income. So that's how the math works in these income annuities. The reason I want you to understand that is because I don't want you to get fooled by the hype anymore. I don't want you to get fooled by going to these dinner seminars and hearing these outrageous bonus numbers and thinking that is going to be the best annuity for you out there. I'm going to show you a real life example now with some numbers that actually will sound counterintuitive, but once you understand it's those three calculations working together, the bonus, the roll-up rate, and the payout rate, that is what determines the highest income from any annuity. Then you'll know that any one of them individually really becomes irrelevant, especially the bonus. So we're going to take a look at a married couple here. Their ages are actually irrelevant for this example, but what they were going to do is fund an annuity with $500,000 from their IRA, and then they were planning on working for another 8 years. So let's just take a look at this example. Let's just take a look at an example here of one of the hyped up annuities that's out there right now versus what was actually the best fit and the highest contractual guarantee for their situation. I want you to guess while we're doing this what you think would be the highest income. So annuity number one has an 8% bonus, has an 8% compounding interest roll up, and a 6.5% payout rate at the age of income activation. Annuity number two has a 20% bonus. So the bonus is more than twice as much. It has a 10% simple interest roll up, and the payout rate was 6.2% at the age of income activation. So the payout rates are pretty darn close, but then you also have a bonus that's over double of annuity number one, and the roll up rate is bigger. In your head, just what is your gut reaction to what would be the highest guaranteed income from this annuity? Like most people, just their simple in the head math would say annuity number two, because it has a bigger bonus, it has a bigger roll up, and it has a very similar payout rate. But they would be very wrong. See, annuity number one has a guaranteed income at the time of their activation, 8 years from now, of $64,968, almost $65,000. Annuity number two, that has the bigger bonus, has a guaranteed income of $54,500. That's a 19% difference in income. And again, this isn't based on any magical index growth or anything like that you'll see with some of the other annuities out there that have these huge bonuses. This is the contractual guaranteed income that they will receive. So if they would have went with the hype of a bigger bonus, a bigger roll-up rate, and a very similar payout rate, they would have been dead wrong to the tune of about $300,000 over a 30-year period if they just would have bought into the hype. So this is what I want to walk people through every time they reach out to me. Don't buy into the hype. And honestly, anything you look at when it comes to guaranteed income like this, you should totally ignore whatever they're telling you. I don't even talk about the bonuses on these products anymore. I used to because I used to think it was a good selling point. It's not because it doesn't matter. It took me a little while to actually accept that. So any advisor that you're talking with, If they're telling you about bonuses and roll-up rates, that's all fine and good because it is part of the annuity. But they should be able to verify within a matter of minutes that particular annuity that they're pitching to you is the actual highest guaranteed income for you or you and your spouse in the future. And if it's not verified by third-party software like this, then it's just their opinion. That's all it comes down to. Now, how much of this do you really need to understand to get the benefits from the annuity? And the answer is the exact same that you need to understand about the physics of aviation to enjoy commercial air travel. You don't need to understand any of this. But I made this podcast. Normally, I make these newsletters and these videos and these podcasts based on something that I'm experiencing on a pretty consistent basis. And I've been crossing this bridge a lot with people who are being pitched these high bonus, hyped up annuity products. And it can be frustrating for them to hear me get frustrated to continue to try and explain this to them. So I wanted to just put this out there that you really don't need to understand this stuff to get the benefits of it, just like you don't need to understand how your cell phone works to be able to use it. But for those of you who have that engineer mindset and you want to know the details, now you know. It's the three calculations working together that give you the biggest guaranteed income: the bonus, the roll-up rate, and the payout rate. So everyone, that's going to wrap up episode number 25. This was a quick hitter, but I want to keep it as simple as possible for you. And I hope this information is helpful to those of you who are watching and listening. And if it is, help us get this word out by subscribing and liking and sharing this podcast with other people that you think would find this information helpful. And as always, if you have questions about your personal retirement strategy, you can always reach out to me by going to atlasannuity.com and booking a short phone call to get your questions answered. And then we can determine pretty quickly if the Atlas Annuity strategy will be beneficial for you and your situation. Again, this is Marty Becker, wishing you all the best in your financial education, and we'll see you in the next episode.
We hope you enjoyed today's episode of the Atlas Annuity Podcast. All information presented is for educational purposes only and is not a recommendation to implement any tax strategy, nor is it a recommendation to buy, sell, or transfer any security or insurance products. Atlas Financial Strategies Incorporated is an insurance-only licensed entity, and any decisions to buy or sell securities should be discussed with a licensed securities advisor, and any tax strategy should be discussed with a licensed tax professional. Past performance of any strategies or products mentioned are not a guarantee of future returns. For any other questions or concerns, please go to www.atlasannuity.com.